What's going on, guys? So what we're going to take a look at today is going to be Tesla. We're going to start off with the daily time frame. Now, if you've been following Tesla, we've been on a phenomenal run going back almost about a month's worth of time here. If we look at the last time we broke out over this 200 period moving average, you can see the price was sitting at around $199 to a high of 204. This was the breakout here. So if you were buying Tesla long yesterday with intentions to keep holding and going long, you kind of have to start to understand that you're jumping out of the 20th floor versus taking, a little bit of a tumble off the first or second floor. And what that means is the farther away a stock gets from its original breakout, the higher the chance that the pullback is more significant. And obviously we're looking at a 15-point down day on Tesla. We're down 5.5%, currently trading at 259. So what's next, right? What's next for Tesla? Are we going to take out the highs of 276 and continue to run to 300? It's entirely possible, but I think the market as a whole, especially big tech, needs a little bit of a pullback and allowing these buyers to kind of step in at some lower price points, okay? So anytime a stock gets extended away from its original breakout spot, the higher the chances and the bigger the odds are that the pullbacks are going to be a lot more drastic, a lot more significant. So if we're just looking at the daily time frame here, if you are short, congratulations. Hopefully you guys are cleaning up some profits. Now, the first area to have started to clean up profits was around 260, 261. The next support that we have is going to be the 10-day moving average, and that's sitting at a price of around $252. Now, if you're looking to barely start, okay, if you're looking to barely start your short position on Tesla, I would kind of hang tight a little bit. And the reason why I would hang tight is because, again, just like you don't really want to be loading as we get away from the original breakout spot, if you're trading on an intraday basis, meaning you're using a smaller time frame and you're shorting a move, you don't really want to be chasing a stock that's down 15 points on the day. Now, could Tesla come down 1, 2, 3, 4 more points? Sure. Right? But the chances of an intraday bounce to get trapped are greater. So what we're going to be doing on Tesla for the rest of this week is going to be looking for a confirmation through today's lows. Now, as it stands now, the price is $257.62. That could change. We could put in a new low. The game plan for tomorrow being Thursday, the 22nd, we are looking for either a flat, a green, or a gap open to the long side. Let that get rejected, and we are looking for the confirmation through today's lows, currently sitting at 257.62. Our price target, our profit potential is going to be in the 250s, 251, 252, 253. Take $1, $2, $3 off the stock and cover your position as we come into this 10-day moving average here, which is your rising daily support. Now, if we take a look at the weekly time frame on Tesla, we are going to see a nasty inverse hammer candle, which is signifying a short-term reversal. Now, that does not mean that Tesla's going to come all the way back down and be trading at 158. What it means is we need a little bit of a pause. We need a little bit of a break. Our next weekly support is going to be around 250. If we do close this week below 250, we would be looking to target a price point of around 235, which is still a hell of a move from reclaiming this 20 period moving average and getting back over the 200 period moving average on a weekly time frame. So again, nothing to be concerned about for perma bulls. If you're a long-term investor, I think since January, a lot of stocks have provided fantastic opportunities for you guys to make money. And in fact, sensational amounts of money to the long side if you were buying the dip in 2022 and even early 2023. So definitely lock in those profits, shuffle that portfolio around. And if you would like to hedge yourself, you can hedge yourself by taking some of the Qs. If we look at the triple Qs, which is a NASDAQ ETF, and we start off looking at the weekly time frame, this week is going to be the first week that we're not putting in a higher high here. Our pullback potential is sitting at 357. You could take 357s or closer to 340 puts, post date those at least 1 month out to act as a hedge for your long-term portfolio if majority of the stocks that you hold are in tech. This will protect the downside risk from you giving away a lot of profits if you are a perma bull, and allow you to capture money on the way down as we come into this back test. But if we just look at the weekly chart on the triple Qs here, our original breakout spot on the NASDAQ was sitting at around 327. So from 327, we've ran up to a price of 373, which is a fantastic move. And anytime you get this significant of a breakout, you need a pullback. Now, I would expect a healthy pullback to be somewhere between 340 and around 350. That would be considered a healthy pullback, get some distribution, some sideways action, hold this level, let and allow some more buyers to step in before we make the next leg higher. If we do get a pullback harsher than that, I would be looking at the 327 price target, which is our original breakout spot. So that would be considered and classified a classic break and retest, allow those buyers to step in, consolidate, and then take us back up through the recent highs. I hope you guys enjoyed this video. If you guys would like to learn how to day trade and be a little bit more consistent with your strategy and your risk management and your trading plan, make sure to join evolutiontraders.com. That's where you're going to get access to both of my 2 courses, study guides, as well as live chat with the rest of the team, as well as one-on-one coaching. I'll see you guys all on the inside.